Yo, what's good, y'all? I'm about to show y'all this trade I had took on Friday. It was on crude oil, and I'll also be showing some back testing of the strategy I use, and then it'll probably just be it for today. Just trying to put more info out there. This kind of like a journal for myself, and it's also just helping anybody else going on their journey, trying to find consistency because I know how hard it is. So I want to give the videos that I wanted and that I was looking for as a beginner trader and someone who's still learning but much further along now. So I'll just start with the breakdown of the trade I took on Friday. It was crude oil, and the whole last week was kind of frustrating because I kind of knew where price wanted to go on most of the days. I'll say 3 out of the 5 days I could have profited. One day I got stopped at break even and then price ran in my favor. Another day I think price was just chopping badly and it just ended up stopping me out. And price did go in my intended direction. And then on Friday, this happened on crude oil. So Nasdaq had, I want to say, already ran without me, and I had missed the entry because it just didn't look clean to me. And I just was like, fuck it, I'ma just look for something else. So I kind of was like back testing, and then I just was like, let me check my other assets to see if they provided a setup today. As soon as I looked at crude oil, I saw this right here. We had ended up coming down and running this low on a 15-minute chart, and this was at 10 o'clock. So start from the top. I always start on a 1 hour. You can use the daily as well, which sometimes I'll look at, but a lot of times I'm trading a 5 minute, 1 minute. That's just, it's a lot of information. I mean, how do I say it? Like, to me, I feel like I'm more accurate when I use the 1 hour, solely just the 1 hour. It just limits me from overthinking. That's what it is. It causes me to overthink when I use the daily and I start factoring in too many time frames. It just, I'm more prone to mistakes. So I found something that worked for me. It worked for me. I seen profit. I seen progress with it. So I'm gonna just stick to what's been working. So the 1 hour looks a little bit more bullish to me. I know overall it looks a little bit more bearish for sure because you got this swing high, move down, come back, swing high, move down, come back, swing high, and you got the bearish order flow, yeah. But when I started seeing these sequence of green candles back to back to back to back, and then we're damn near running this high right here, I'm like, all right, this looks more bullish. To me, it looks more bullish. Overall, bearish, but hey, that might take a while for it to make this pullback and then go down here. So I'm just trying to go with the trend. The trend is your friend. At this moment, it looks like we're a little bit more bullish. So that's what I was expecting to see, higher prices. So at 10 o'clock, we came down, ran this low while we were bullish, rejected it. You see how it rejected it, then closed below it. Strong rejection too. I think that's an engulfing. I don't really know candle patterns like that, but I think that's an engulfing candle. So we had that. So I went down to the 5 minute and I was like, all right, let's see if I got my entry model. We do. We swept it, and then we had that strong displacement closing above the last sequence of down candles, which would have been these two candles. One, two down candles, and then we closed above them. So I entered right here on this order block. And when I ordered, we chopped around for a little bit, and I just was like doing other things, cleaning up the house and that type of stuff. And then this happened. We got all the way up near my first target, which is 1 to 1.5. And my final target would have been here, which is like almost a 1 to 2. And we didn't touch my, well, the market says that it didn't touch my take profit. My take profit was right here. I did not get tagged out. So that's just part of the game, man. That's just part of the game. It was super frustrating because once again, I called the market right more or less because I knew it would go up, and it did go up, and it got to my first target. Did not fill my order, And then we went back and my stop was at break even. Because after we got up to my target, it's no sense for me to allow price to come all the way back down and take me out for a full loss. So I was like, all right, I'm gonna move my stop to break even after we hit my first target. And my first target did not get hit, so I got stop break even. And that was my trade on Friday. So what I'll be doing next is I'll be showing y'all how I trade my model. Show y'all the analytics. I use FX Replay. I know after backtesting this, I'll say probably over 150 trades, my win rate gonna sit at about a 50 to 60 anywhere, and it may go below 50. You see here it's 46.7, 67, but you know it kind of fluctuates. So from the data that I've seen, it's normally around like a 50 to a 60. And if you got a 2R win on each trade that you take, hey, you printing, you making a lot of money doing that. So that's why you can see I'm still up after what 31 trades. I'm up 4,000, almost $5,000, and my win rate is a 46.67%. So I'm not winning half of my trades, but I'm still making money, and that's just the beauty of that risk to reward. And just some of the trades. On average, that's what I'm trying to say. On average, I take about 10 trades per month, and you can see that down here. 8 to 10 trades, 13 trades, which is very high. 8 trades, so 8 to 10, 8 to 14 trades a month. That's something that kind of frustrated me. And kind of doesn't really frustrate me as much anymore, but it definitely did before. The amount of trades I was taking was frustrating because I wanted to make money fast. And with this model in particular, you're not going to be taking a lot of trades. This model is more about precision. You're not going to get a trade every day. You might get a trade 2 to 3 times a week. That's on average. And yeah, this is the results from April, March, February, and nothing in January. Alright, so I'll just run y'all through a couple trades because I gotta go get some food and I gotta have some coffee. Well, I don't gotta have coffee, but I want to have some coffee today, so I ain't gonna stay on here too long, but I do want to break down what I be seeing. So let me move this out the way so I can see the time. Alright, so just walk y'all through my strategy. This is a new day. It's 8:59. I arrive to the chart at 9 o'clock every morning. I just try to keep my back testing as close to real life as possible. So this is how I start. I'm on a 1 hour chart. I see we had this big drop down. Then we kind of start to have the pullback, and now we're continuing to go up. Right now, I would be looking to continue to pull back because we haven't had any break lower saying that, all right, the pullback is over. So right now, as far as I know, the pullback is still on and we're still going higher. So I don't want to try and call the top and say, hey, we're reversing right now, even though overall we are bearish. I don't want to say, while the market is still going higher, hey, I just think the market's going to just drop lower now. And then, yeah, it's just get ate up. And then the market just keep going higher. I'm just going to follow the trend. That's just what I'm going to do. And if I lose, I lose. You know, that's what's been making me money. So I'm going to just keep doing what I've been doing. So it looks more bullish to me at the moment. So I'm going to just look for bullish trades. All right. So I'm going to just fast forward to 9:30. And if it's news at 8:30, I'll take a trade before 9:30 if it's manipulation. Because that's all I'm looking for. I'm looking for the direction, which is bullish, a manipulation. If I'm bullish, I'm looking for a manipulation lower, which would be a fake run of like a swing low, a retest of a fair value gap, or something. Those two, only those two is what I'm looking for. So let's see what happens. So bullish, 15-minute chart waiting for manipulation at 9:30 or after 9:30. So at 9:30, you see how we ran this low? It may reverse and continue going higher here. It may not, but let's just see. I'm gonna check ES to see if it's a SMT. A SMT is a cracking correlation. So for example, this is a SMT. Change the color of it. I don't like that color. Do blue. Nah, do white. All right, this is a SMT. You see how on S&P 500 we took this low right here, this swinging low, and on the NASDAQ we did not take that corresponding low. Split screen real quick. NASDAQ, yes. This corresponding low was not taken. That's a cracking correlation showing that we might want to continue higher. Right at 9:30 when the equities open, and typically there's manipulation and there's red folder news. Okay, this is looking very bullish in my opinion. Then on a 1 hour we were still going higher. We haven't displaced lower. Okay, this is looking good. Let me go to the 1 hour just to check where we are in the range. Okay, this is a fair value gap. So this may, I can take this, or I can take a 1 hour to 5 minute setup, or I can take the 15-minute to 1 minute setup. Just whatever you want, whatever one you decide. 5 minute is going to hold more weight if you're looking for your entry, because it's more information, it's more data, so it means more than on a 1 minute. A 1 minute you might see a change in the state, or you might see your entry and then it stops you out more, and it's harder to read, you know. So this is our SMT from this candle to that candle, and from this candle to this candle, and on a 1 hour we're inside of a 5 minute fair value gap. On a 15-minute we're sweeping this low. So let me see which one looks better. On a 5 minute, we haven't got our entry model yet. So let me see if we got something on a 1 minute. 1 minute, we don't have our entry model. I'm gonna stick on a 1 minute. I just want to see how this will play out on a 1 minute chart. So I want to see price come back and close above these series of down close candles, or create a fair value gap, or inverse a fair value gap. So let's keep going. Okay, you see how we closed above this red candle right here? I could get in right here if I wanted to, or I could wait for more information and just see what price does. You don't have to just enter so quick, but this looks very good. The reason this looks very good to me is because we got relative equal highs where people's stop loss will be sitting, because you're taught in retail trader, in the retail trading space, you're taught to put your stop loss at these highs over here, because this is a strong support and resistance level. Price didn't want to break above this high, so put your stop loss up here. I'm going to be targeting that because that's where people's stop loss is resting, and it's a high probability chance that the market will want to go take those people out. They're not just going to let your ass win. Everybody's going to have to lose. How, like, just think about it. I heard one of my mentors say, how can the market inflict the most pain, the maximum pain? This market is highly manipulated. They don't want to see nobody winning. That's why you see stop runs like this, run below an old low and go higher. Stop run to stop run to stop run to stop run. They just taking people out and redistributing the money. Okay, so got that covered. So I got a potential entry right here. The only thing that would be stopping me from taking this entry right here, I'm gonna take it, but one thing that I'm looking at that I don't like is we're not displacing. Displacing is these red candles. These are big red candles, like at least this one and this one is. and it's creating a fair value gap in here, and you can just tell like, dang, the market is super bearish. It's not like these candles right here where it's just kind of indecisive, small, wicky. Displacement is big, large body candles like this green candle right here, like this red candle right here. And this right here doesn't look that um, persuasive to me. To like, it's not screaming take it, but it fits my setup. It fits what I'm looking for. So I'm gonna take it for the sake of, for that reason. And see, I would probably lower my risk a little bit because it doesn't look like exactly to a T what I'm looking for in my model. So I'm gonna place my entry right here and skip. Well, it worked out. And you see how it chopped around? I wasn't expecting it to work out. You could probably tell by my expression because we chopped around for a lot. Typically when we chop around, your stop is going to get hit. That's what I've seen through back testing. If we chop around like this around my entry, we're going to get stopped out. Typically when I enter, the trade acts like these candles right here. Let me get rid of this. Like these big green candles. Typically whenever I enter, right away or like no more than 5 minutes after, we just displace and go higher, and prices just runs. But we chopped around, and that kind of made me hesitant, but the trade played out, and our uh, idea was correct. That's what happened. And I'll just walk through it one more time, go a little bit slower if I need to. The reason I took this trade is because overall we looked a little bit more bullish to me. Even though we're bearish overall, this the most recent price action is bullish on a 1 hour chart, and that's what I use as my highest time frame, my higher time frame. We're bullish overall. We haven't displaced below like this swing low down here, or like this fair value gap. We kind of displaced beneath it, but we ended up inversing this bearish fair value gap and going higher. And then on a 15-minute chart, we came down, swept these lows while I'm bullish. Came down, swept these lows, and then on the 1 minute, we had our change in the state of delivery, our order block, which is the last down close candle that the last down close candle or series of down close candles that swept liquidity and then was closed above. So this red candle right here went below the swing low of that green candle, and then after that there was a sequence of green candles that closed above that red candle, showing that, hey, the order flow may be flipping and we may be going bullish now, which is exactly what happened. We came back, retested it, chopped around, went to my target. That's the trade. It's very simple. I mean, it may take a while if you're an absolute beginner, but if you have any type of basic knowledge of trading, this is a very simple model. It's literally 3 steps: higher time frame, direction, which is the 1 hour. You can also use the 1 hour, like I used it. So you got the, let me type it out. Step 1, find direction. Direction. Gotta sound that shit out, boy. I'm kind of slow. Let me chill out. Alright. Step 2, find POI in direction of order flow. Okay. I'm gonna go back to just one chart. Okay, there we go. Step 1, find direction. Step 2, find POI and direction of order flow using the 1 hour and M15 chart to find your POIs. And your POIs parentheses, POI is FEG and swing points, which is a swing high if you're bearish and a swing low if you're bullish. Swing points. All right. Step 3. Use M5 or M1 to enter using FEG, IFVG, and order block. Order block. Order block. Oh, my mic had turned off. All right, we back. Or order block. Okay, that's it. That's my motto. Step 1, find direction. Step 2, find the POI and the direction of order flow using the 1 hour and 15-minute swing point POIs using swing points or FEGs. Step 3, use the M5 or M1 to enter using FEG, IFEG, or order block. What is an IFEG? What is a FEG? This is a FEG right here, this space in between these candles. This is an inefficiency in price. Price wasn't fairly delivered. It was only offered to the downside. So price must come back and feel that. You don't know when that may be, but price must come back and feel that it's an inefficiency in price. Only sellers were offered an opportunity to get short, and it's just a strong movement lower. Buyers wasn't offered an equal opportunity, so it's an inefficiency in price. IFVG is when you have this exactly right here. Let me get rid of this so you can see it better. This is the IFVG. You got this bearish bearish candle right here. You got this green candle, and then this big red candle. The second candle is always going to be expansion candle. It's going to be a big candle. Not necessarily have to be super big, but it's going to be the expansion candle because it has to create space between the third candle and the first candle. So you got the first candle, the second candle, and the third candle right here. And you can see there's a little gap. Go with purple. There's a little gap in between these 3 candles. Alright, and it's an inverse because that gap got ran through by this green candle. It got closed above. It got closed above. So when we get this green candle running through it, that makes it a inverse fair value gap. And I also use that for entries. And for the inverse, to my knowledge, it doesn't have to be another fair value gap. Like this green candle also created a fair value gap. When it inverse this, it doesn't have to be. It can just be a series of green candles or green and red candles. As long as this get closed above, it's an inverse fair value gap. As long as it get closed above, it's an inverse fair value gap. And I can take an entry when price comes back down and retest that inverse fair value gap. And that's it. Let me zoom out if you need to screenshot it. Alright, and I'm just gonna now we're taking a while, but I just want to break it down. It's no rush. I'm just showing my model. It's not about like pumping out 100 trades. Like, I know this shit works. I'm just showing you the mechanics of it, and that's all I'm here to do. Okay, and then I like to screenshot it too. So I'll go like, this is how I typically do it. 1 hour bullish. M15 swing low sweep / 1 hour FEG tag M5 Was it the M5? No, it was an M1. M1 OB entry. And then I screenshot it on the time frames that I used, which was the 1 hour, 15 minute, 1 minute. So I got that right there, screenshot. Then I'll go to the 15 minute. Oh, I forgot to put it was an SMT also. That's added confirmation and equal highs. SMT and equal highs. That adds confluence. That's the word I'm looking for. It adds more confluence and it gives me more confidence to take the trade because we got these equal highs. There's an SMT showing that it's a cracking correlation with the correlated asset, which is the NASDAQ. They should be moving in tandem. If ES sweeps this low, NASDAQ should be sweeping this low. When they don't do that and there's displacement, it's showing that, hey, we might want to go higher. Okay, so screenshot this. It's 15-minute chart. Go to the 1 minute chart. Okay, then we got our entry right here. That was a good trade. Beautiful. Exactly what I want to see. Alright, perfect. And then I just clear everything off, go to the next day. Got everything screenshotted, put it in a vault. Alright, so right away, you see what I mean when I was looking at yesterday? This is a new day. Yesterday, we were over here. And I know some people may have been like, but the price action is bearish. But you're right. But in my opinion, you know, trading is just how you interpret it. We hadn't created we haven't displaced lower showing that, hey, the pullback is over. This is an impulse leg, and when we're bullish, you get impulse, retracement, and it's just going down, up, down, up, down, up. Here, we just got down. We come back up. Have we gone lower yet? Displacing lower? Going to take out this low? No. So we're going to continue higher until we get that. We go up higher. Have we displaced lower yet? No. I show up to the chart and we're still going higher. We still look more bullish. So I'm going to be targeting this high and potentially this high. Mainly this high, because that's the low-hanging fruit. That's the easy target. Alright, so I know we're bullish on the day. That's the hardest part. Finding out if you're going higher or lower is the hardest part to me. Alright, so now we go to the 15 minute and just wait for a low to be swept. If we're bullish, since we're bullish, we're going to be waiting for a low to be swept or waiting for a fair value gap to be tagged. And SMT is optional. Sorry, I got the hiccups. Alright, so waiting for 9:30 since this is the equities. Alright, so we're running some lows. We ran this high first. Just think about it like this. In order to go higher, we must go lower, take liquidity or rebalance price, then go higher. Like a slingshot. You got to pull the slingshot back and then it goes forward. Just like now. We went higher to take this swing high right here. This was manipulation. Some people trade that. I personally don't trade it because it's going against the higher time frame order flow, which is bullish at the moment. So I don't want to be going against the higher time frame order flow because I'm not that experienced. Honestly, I'm not going to lie to you. I'm still finding profitability. I mean, I know this shit's close. I can feel it. I'm on the brink of being profitable. So I'm not going to be taking these counter trend setups. I'm going to be sticking to trading with order flow. So I'm just going to wait. If I don't see my setup, if price just drops and keep going and keep going and keep going, I just don't trade that day. But we swept this low, rejected. Now we have a big ass doji candle, crazy doji candle. And on the NASDAQ, do we have anything? Yep, on the NASDAQ SMT. Let me split the screen again. I always use these together to see if we have SMT. And get rid of these drawings. Alright, on the 15 minute. I think I might be tweaking. Okay, yeah, that's what it is. We got the NASDAQ over here. There we go. I was tweaking. My chart wasn't calibrated. Okay, so on the NASDAQ, we ran this low. We're trading this out of this big ass fair value gap too, which I'm sure is a 4-hour fair value gap, but I only used the 1 hour. So we got that there, which is this to here, which I'm not gonna draw because it looks ugly with the line cutting through price like that. So I know in my mind that it's a SMT. So what I'm gonna do is I can wait on a 5-minute, which is already starting to it's already starting to flip bullish because we had this last red down close candle that closed below this swing low right here. They closed below the swing low right here. And now we haven't done it yet, but it looks like we're about to close above it. So in my opinion, I could also take this, which looks really good right now, but the only thing stopping me from taking this is the target. This would be my target right here. And look how close it is. Like if I put my long tool right here, put my stop loss at the low, because this is where the trade I did would be invalidated. That's where my stop loss goes. And put this right here, 1 to 0.25, which isn't that great. And when price hits this level, it's no telling if price is going to continue higher. So I would rather, if price was a little bit farther away, if my first target was a little bit farther away, or if price came back down lower and then went higher, I would take it. I'm not going to take this trade because it's only offering me 1 to 0.25, which you could take if you want, but I'm not going to take it because I want to go to 1 to 1.5 or 1 to 1.2. I mean 1 to 2 or 1 to 1.5 is what I was trying to say. Okay, so let's just see how it plays out. 15-minute. We came back lower. That trade did not work out. We would have came and ran through that fair value gap. So let's keep waiting to see if we get anything else. We still got this SMT. Just put it like that for now. How do we look on a 1 hour? On a 1 hour, okay, this looks very bullish. It would be different if we came down, swept this, and then continued higher. But we came down and closed. This is a big ass red candle. This looks extremely bearish on the NASDAQ. So I would be very hesitant to take a buy for that reason. Even though we still have that SMT, if I do take something, I'll probably lower my risk because it doesn't look likely to play out. And we're not really at any key level because when I look for a sweep, I look for this candle, like how this candle was. It ran below it and it rejected it. This ran below this candle low, this red candle, ran below this candle low right here, and then closed below it. That doesn't look like a sweep to me. So I'm not really keen on taking those type of trades. And this is just inside of a big ass fair value gap. It's not rejecting it, it closed. This looks very bearish. So I'm not going to be taking any buys. And already it's only 10:30. I stopped trading at 11, but I can tell you that this session is over because it would take too much time for price to turn around. It's already 10:30. I stopped trading at 11. We're not turning around and giving me a buy setup. We could, but it's unlikely. The odds are low that will end up turning back around and giving me a buy setup. This day ended up being bearish, which I can't predict. The price action was more bullish to me. So I would skip this day, but I'm just gonna, I would skip from here. It's 10:34. I would just go to the next day. If I'm live trading, I'm walking away from the chart. It's nothing to see. I'm not taking a trade. Yeah. I'm just skipping through price. You see how we're just fucking around? We went lower, and then we just started consolidating. It was nothing for me here. And even if I was bearish, and it's like, fuck, man, I missed a bearish move, which I don't say. But even if I was, it was like no entry at all. Maybe on here it was, but I wasn't bearish, so there's no need for me to like feel FOMO or like fear of missing out because my entry wasn't presented. Yeah, you see, if it's 4 o'clock and this is the price action. This isn't what you want to be trading. This isn't high probability conditions for the model that I use, my strategy. When price is going sideways like this, I don't want to trade. I want to trade when price is like this. When it's like going up, going down. When it's going sideways, no trade. When it's going up, trade. Down, trade. Sideways, don't trade. Simple. On to the next day. This might be my last one because I need some food and my mouth is dry as fuck. So start from the 1 hour. We still look bullish. You see, we chopped around yesterday, came down, manipulated, and ended up going lower, showing that we still have bullish order flow. So I'm still going to maintain my bullish narrative. We came back down. So what I'm seeing, this is a good trade. I mean, this is a good representation of what I look for, because I can't say it's a good trade because I haven't taken a trade. This is what I look for. Beautiful, beautiful, beautiful. A++. This is what I want to see. It hasn't played out yet, but so far it looks great. It's 8:30. CPI. CPI 8:30 news candle came down into a fair value gap. Also swept a low. Also below midnight opening price. Why is that important, below midnight opening price? Because if you look at the formation of a candle, you have the how can I make this very simple? There's so many videos. If you look up open low high close, open low high close, open high low close, you'll find so many videos on YouTube, better than I could possibly explain it. Basically, when you're bullish, the market is going to, most days, or every day actually, every candle, this is how it forms. This is just a fact. You open up, if it's a bullish candle, it's going to open up at midnight, go lower, manipulate lower most of the times, go higher, come back down, and close. So it'll be something like this. Let me see if I can draw this. This is my first time teaching this. Like, I've watched so many videos on it, but I'm not sure if I know how to explain it quite that well. So you're gonna have price opening right here. We're gonna go lower, then we're gonna go higher, then we're gonna come lower to close. So this is a bullish candle. If you think about it like this, this is the open of the candle right here. This is midnight. This is this white line right here. We opened, we're manipulating lower, stopping people out, touching a key level, and then after we manipulate lower, we explode higher, go higher, creating the body of the candle, and then we come back lower to close. And this is what it looks like. Just look at this green candle right here. We opened on this green candle right here. We opened right here at the bottom of the body. This is where we opened. We went lower to manipulate the body, the green body, went higher. Look at the wick at the top. The wick at the top. Let me take the magnet off, it's fucking me up. We went higher. And we closed. We didn't close all the way at the top of this wick. We went open here, went lower, went higher, and closed. Came back down a little bit and closed. And that's basically why it's important to know how candles form, because it helps you visualize the market and you can see what's happening before it happens easier. Okay, so we got 1 hour is bullish still. Came back down, swept the 1 hour low, touched a 1 hour FEG, and I can take a trade before 9:30 because 8:30 news manipulated. That's all we wait for 9:30 for mainly is the equities open. If there's no news at 8:30, we're waiting for 9:30 to manipulate. That's what we're waiting for, 9:30 manipulation. If 8:30, if there's news at 8:30 like today, core personal consumption expenditures, CPI or NFP or anything like that at 8:30, and we manipulate lower, we expect 9:30 to be a continuation. We don't expect 9:30 to manipulate. There's no reason for it to manipulate. 8:30 manipulated. It still could, but I want to anticipate 9:30 being distribution. So looks good. I want to go check S&P. Oops. Let me go check S&P. Or was I just on S&P? I think I was. I was checking the NASDAQ. All right. So now I go back down. Let me see the 1 minute. I want to wait for the 5-minute candle to close above this red down close candle, and I'll take a trade. If we get that, not yet. Okay, we came back down again. Came back down again. Wicked up, haven't closed. Closed. Taking a trade now. Let me see if NASDAQ offers a better trade opportunity. It doesn't. It looks very bearish. That could be something to look out for because this looks more bearish. They're not going in tandem. They're supposed to be going in tandem. And this looks more bullish. So it's kind of conflicting. So right now I'm kind of like on the fence. We're still respecting this. I'm still going to take the buy setup if we get it, which it looks like we got. But it wouldn't be a bad idea to lower risk. Okay. This is very choppy. This is not what you want to see. I wanted to see price come down, manipulate, and just have these green up candles. I don't want to see price consolidating and going sideways around here. That's more confluence to lower my risk or possibly not take the trade because this isn't looking like what I want to see. I'm trying to think if I want to take it. I'm probably going to pass on it, and it's going to run to my take profit. If I was to take it, I can just see that now. I knew it. Oh, no, no, it didn't. It didn't. It came back, stopped. I thought it was going to run. So now that we came back and manipulated, let's see. Oh, and we got SMT. Okay, this looks good. This looks kind of good. I might be wanting to take a trade. It's 10:34. We're still in my time window, which is from 9:30 to 11. We look good. All right, we took that high right here though, but I still think the buy side looks pretty nice. Still think bullish setups looks pretty nice. We never closed below this low. We still got these highs intact. I think that's a SMT on NQ. We're still respecting this 1 hour fair value gap, which is important. We still got this high. We still got this high. We still got this high right here. Looks pretty bullish to me still. So I think I'm gonna go ahead and try my luck. If we create a fair value gap with these green candles, or if we inverse this red candle, I'll take a trade. Nothing, 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 nothing. I'm not taking a trade. It's past 11 o'clock and we just chopped around. So that's a no trade day for me. It looked like it was going to be something good, but you just got to have that discipline to wait. You see, and we came back down. We had the SMT at these highs on NQ. We had this big ass drop right here, and it wasn't in correlation with S&P. So I'm glad I didn't do anything. That shows you right there that you don't want to just be too trigger happy. You want to wait for more confirmation. If I was on a 1 minute, I probably would have took something up in here. But that's what I was saying earlier. The 1 minute it's going to give you more trade opportunities or more entries um, than the 5 minute, because the 5 minute takes longer to create your entry model than the 1 minute does. So I'm going to go to the next day, clear my drawings. It's the longest video I done ever fucking did. My mouth tired from talking. My mouth dry as shit. I need some water, boy. I need some motherfucking water. hmm Alright, right away, this doesn't look good. It doesn't look good because we're going sideways. We could easily go either way. When you can frame both sides of the market, when you can say, hey, I can see us going up and I can see us going lower, that's not good. You don't want to trade. You only really want to trade when you can mostly only see one direction. You can only see us going up. You can only see us going down. If we're going sideways, that's not good for my trading model that I use. Yeah, that's not good. So I'm not going to be trading on this day. I'll probably come back and see how it played out. It looks more bearish. Um, like we might go up and sweep this high. But I personally just don't like how this looks. That's my opinion. We could go up and sweep this high, or we could sweep this low and start a pullback. I don't know. I want to see if there's anything else that looks better. So I look at gold, and I also look at crude oil. And gold looks like it's throwing a setup. This looks way better. You see how we're trending in one direction, going only down. Then we got this fair value gap right here. Bearish, clear bearish order flow. 1 hour fair value gap just got tapped into. All right. And then we're displacing below this inverse. We're respecting this bearish fair value gap. This is looking very good. But I think I might have missed my entry because I could get in on the inverse of this. I could get in on the inverse of this candle, but that would be too low. My stop loss and my profit target, my TP would look like this. My stop loss would go there. That's a big ass stop loss. And my target would be here. I personally don't want to take that because after price hits this low, it's really no telling how far we will go down. Like we could just hit this low and then just start a pullback, go take this high. Or we can just keep running. So this doesn't look like the highest probability trade because it's really only offering is like not even up. Yeah, that's not good. But if I was to enter up here, which has already been filled, it would have been a 1.7, which would have been better. That looks a lot better. And if I was to enter right here, yeah, we can just see how it plays out and probably go to the next day. But if it were to come back right here, I'll just like throw a 0.5% risk on just in case we wanted to come back, retest it again and go lower, because that don't look too bad. That looks like a decent little trade. Yep, and we did. I promise this isn't cherry pick. This shit is working out perfectly. Hey bro, I promise I didn't know this was gonna work out this well. Like the first trade I took played out exactly like I thought it would. The second trade, I was very patient and I was like, this might not work. It didn't work. This trade, I was like, if it goes back and retest my motherfucking entry and goes down, I'll take it. It did, and bruh, you can't make this shit up, bruh. I'm gonna have to end the video on that one right there. I mean, I don't know what else to say, man. This shit works. You just gotta be patient. You ain't gonna get a trade every single day. I'm still trying to find profitability. Just want to put that out there. I'm not there yet, and I'm just on my journey, and I can feel myself getting closer and closer and closer. You just gotta follow the process, not the profit, and the process will get you the profits. That's all I gotta say, bro. Take it easy, man. I'll see y'all in the next video.